Toyota sold more than 11 million vehicles last year. Ford still generated more than $187 billion in revenue. Those are not weak companies. Those are industrial empires. And yet, for the first time in a long time, both can feel strangely secondary to the future of cars. That is the real shift. Because the company putting the most pressure on the next era of autos is not from Detroit. It is not from Japan. It is BYD, a company that spent years getting strong in the part of the business legacy automakers could no longer afford to treat as secondary: batteries. Toyota is still the world's top-selling automaker. Ford still dominates categories that throw off real cash. Tesla still carries a market value that most car companies cannot come close to touching. So this is not a story about collapse. It is a story about control. Because the auto industry is no longer defined by one scoreboard, not just sales, not just profits, not just market cap. Now the real battle is over batteries, software, cost compression, charging speed, and power. Inside the market, sitting at the center of the EV race, China. And once that becomes the lens, the old hierarchy starts to look a lot less stable. For decades, the formula looked almost unbeatable. Build at scale, control distribution, earn trust, repeat across continents. That is where Toyota became one of the most efficient industrial machines in the world, and where Ford built one of the strongest truck and commercial franchises in modern autos. Those strengths still matter. Toyota kept growing, with hybrids doing much of the work. Ford's commercial and truck businesses still generate serious cash, but the pressure moved. And once the center of competition shifted toward EV costs, battery supply chains, charging, and low-cost intelligent vehicles, the old formula stopped looking complete. That does not make legacy giants weak. It makes them vulnerable in the one place the market is moving fastest. BYD did not enter this era as a traditional car company trying to reinvent itself under pressure. It entered with a structural advantage already embedded in the business: batteries. And in the EV age, batteries are not just another part. They are the economic center of the product. They shape cost, range, charging performance, margin, and the room a company has to cut prices without breaking itself. That is why BYD's edge was never just that it sold electric vehicles. Its edge was that it built a deeper system around them: batteries, motors, power electronics, a growing in-house stack, and more advanced features pushed further into cheaper models. That gave BYD something legacy automakers have struggled to build at the same speed: the ability to become cheaper without looking weaker. By 2025, BYD had sold around 4.6 million new energy vehicles, with more than 1 million outside China. Not enough to dominate the entire global auto industry, but more than enough to change what the rest of the industry had to react to. The turning point was not one launch. It was one market becoming powerful enough to reshape the rules for everyone else. China became the EV superlab of the world. In 2025, it accounted for 12.9 million EV sales and produced roughly 71% of EVs sold worldwide. That level of scale does not just reward winners, it rewrites strategy. Inside that market, price pressure turned brutal, and BYD leaned into it harder than almost anyone. It cut prices, expanded overseas, sold hybrids and battery EVs in parallel, and kept narrowing the gap between mass market and high tech. That is where the legacy giants started looking exposed. Ford spent years trying to build a profitable EV business while still absorbing major losses. Toyota remained highly profitable, but battery electric vehicles still represented only a small fraction of its total volume. So while Toyota kept winning the industry that had already been built, BYD moved hardest in the industry that was still being priced, designed, and defined. And then there is Tesla, the company that makes the entire idea of dominance harder to define. Tesla delivered about 1.64 million vehicles in 2025, down from the year before. Yet its market value still sat above $1.4 trillion. That only makes sense if investors are valuing Tesla as something more than a car company. Autonomy, software, robotaxis, AI. So now the auto industry is split across three different kinds of power: Tesla dominates investor imagination. Toyota dominates industrial scale. But BYD may be dominating the hardest battlefield in between, where batteries, pricing, exports, and mass-market EV adoption are colliding in real time. That is why Ford and Toyota can still look enormous on paper and still feel less central to the question everyone else is now chasing. This is where the shift stops sounding theoretical, because the pressure started showing up in places where legacy brands and incumbents were supposed to feel safer. In Europe, BYD sold more battery electric vehicles than Tesla in a month tracked by JATO. Later, reporting showed BYD had outsold Tesla in the EU for a second month. Ford moved in the opposite direction, taking massive EV-related charges and scrapping several future electric models. And BYD's overseas push accelerated so quickly that public reporting pointed to ambitions of up to 1.6 million vehicles sold abroad in 2026. That matters for a deeper reason than volume. When a company pushes faster charging and more advanced features into cheaper cars, it is not just taking share, it is changing the baseline of what buyers expect. And when the baseline moves, every rival is suddenly late, even the ones still larger than you. But this is exactly where the easy version of the story falls apart. Pressure is not the same thing as permanent control. BYD's growth has also shown signs of strain. Early 2026 reporting pointed to sharp sales declines as China's price war intensified and rivals such as Geely gained ground at home. Tesla showed signs of stabilizing in parts of Europe. Toyota kept doing what giants do best, producing volume, profits, and resilience. And Ford began regrouping around hybrids, lower-cost EV paths, software, and its commercial core. So the real story is not that the old giants are finished. It is that their size no longer guarantees they get to define the pace of the market. And once a giant loses the power to set the pace, it can stay huge for years while still losing control of the future. That may be the biggest shift of all. For most of automotive history, dominance meant factories, sales charts, dealer reach, and physical scale. Now it means something more unstable and much harder to defend. Who controls battery economics? Who survives price wars? Who scales software? Who can compete in China, export globally, and still keep pushing costs down? On pure global volume, Toyota still wins. On investor belief, Tesla still wins. But on the question the rest of the industry is now obsessing over, who is forcing everyone else to rethink price, speed, product strategy, and EV execution? BYD may be the most important company to watch right now. Not because it has already won the whole game, because it is already changing the conditions under which the game gets played. That is why the most important power shift in autos is not really about who sells the most cars today. It is about who is shaping the terms of competition for the next decade. Toyota still has scale. Tesla still has narrative. Ford still has businesses that generate real strength. But BYD has become the pressure point none of them can afford to ignore. The giants are still giant. They just no longer write every rule. And that may be the most dangerous outcome of all. Not one clear winner, but a fractured crown, where every major player looks powerful in one arena and exposed in another. The next era of the auto industry will not belong to the company that was biggest when the old rules worked. It will belong to the company that adapts fastest after the rules move. You've watched Triumphs and Troubles. Subscribe to the channel for true business stories and comment, which company should we cover next?